Hey everybody, Joe Joseph here for thedailysheeple.com, and this is your news shot yet again. More economists now sounding the alarm that there's going to be a market correction here. SHTFplan.com showing warning. The U.S. stock market has a 70% chance of crashing right now. I mean, that's pretty serious if you have some credible economists actually sounding the alarm and quantifying a correction in this way. Vanguard's chief economist, Joe Davis, said investors need to be prepared for a significant downturn in the stock market, which is now at a 70% chance of crashing. The chance is significantly higher than it's been over the past 60 years. Joe Davis even added this, quote, "It's unreasonable to expect rates of returns, which exceeded our own bullish forecast from 2010 to continue. In its annual report, the company told investors to expect no more than 4 to 6% returns from stocks in the next 5 years. Vanguard, which manages roughly, get this, $5 trillion in assets and is a proponent of long-term investing, isn't sounding the alarm bells to scare investors out of the market. They simply want investors to be prepared. Listen to this. The risk premium, whether corporate bonds spreads or the shape of yield curves or earning yields for stocks, have continued to compress," said Davis. "We're starting to see for the first time some measures of expected risk premiums compress below areas where we think it can be associated with fair value." Now, according to RT, Davis also said that overreaching is no better a solution for a lower return environment than getting out of the market entirely. He expressed worries that after hearing of lower returns, some investors will view it as a catalyst to become more aggressive to generate the returns that they've been used to in recent years. And remember just 10 years ago, folks, after the 2008 financial crisis, and even still to this day, very little of what happened then was fixed. And the next bubble, according to Mint Partner strategist Bill Bain, says it's about to burst. According to Blaine this time, it's the bond markets that's going to trigger the mayhem and the collapse. The 2008 crisis, which was about consumer debt, was triggered by mortgages. We still have a consumer debt crisis problem ahead because if you take a look at the numbers, we have now exceeded the debt level that we were when we crashed in 2008. So, the next financial crisis, though, isn't likely to be consumer debt. It's likely to be corporate debt. And Blaine warned this, quote, "I'm convinced bond markets are the real bubble we should be watching, and it's going to start in high yield." So that's what he says. Folks, you know, it's always good to diversify whenever you talk about investing in anything. You look at Bitcoin right now, going through the roof. Who knows if that's a bubble? Unfortunately, you don't have any sort of data or patterns to go by, as cryptocurrency is a relatively new thing. And the only thing you can really go to as far as any precedent is how currencies in the past have operated and how people invest in different currencies over time. But this is really unprecedented in our history, so we don't really know what's going on. But I can tell you that more and more people out there are mining Bitcoin. And it shows in the energy consumption, especially in third world countries like Venezuela. Bitcoin mining is actually saving people's lives right now. So very, very interesting things developing in the economic world because we already have mass mayhem and chaos politically, geopolitically, and it's not going to get any better. And now we have a lot of volatility starting to shape up in the stock market, a lot of doubt, and people just warning, you know, the canary in the coal mine is singing like crazy. Now what do we do? I'm telling you, folks, this ain't going to end well. So the best thing to do, of course, as a lot of strategists will tell you, if you invest in the stock market, it's like gambling in Vegas. I mean, some people get lucky, some people don't. Remember this in closing. The rich in downturns always get richer. The poor most certainly always get poorer. but it's the rich that always take advantage of buying low and selling high. I'm Joe Joseph. This was thedailysheeple.com's News Shot. Feel free to comment below and visit our website at thedailysheeple.com. Hashtag wake the flock up. Have a great day, everybody.